Hey, all right. Good morning, friends and traders. Happy Friday. The date is June 16th, 2023. Welcome to the Market Prep. I am JD, once again filling in for Mr. Hoagland, who is taking some time off down in sunny Florida. Actually, a pretty funny story. There is a guy that's watches the Market Prep every morning. He's a big fan of Hoag. He works as a Uber Lyft driver down in Fort Myers, Florida. He offered to pick Hoag and his family up at the airport and drive him to their hotel in Naples. Kind of a good story. They took some pictures, made a little video. We'll have to share that with you guys pretty soon. But anyway, as always, thank you for choosing to spend your time with us. It is our goal here to apply good and accurate context to the markets as well as sound risk management. Remember to hit that lucky like button. Feel free to share your comments, questions, and feedback in the chat. We do appreciate all forms of feedback. And if you haven't already, go ahead and subscribe to our YouTube channel so you get those wonderful updates every time we go live. All right, what's the big deal today? Stocks. There doesn't seem to be much keeping stocks down these days. It appears the markets approve of the Fed's decision to keep rate hikes unchanged this week, or not hike rates this week. And now the S&P and NASDAQ are they've closed higher 6 consecutive trading days and are trading right around the 14-month highs right now. That said, it's also Expiration Friday, and we're going into a long weekend. So a little bit of profit taking mixed with some light portfolio rebalancing could create a bit of volatility in the markets today. Pardon me. So let's talk about expiration for just a second. Today is what's referred to as quadruple witching day. What this means is that 4 different derivative contracts will be expiring simultaneously at the end of the day. We have stock index futures, stock index options, stock options, and single stock futures. Technically, single stock futures don't trade in the US anymore. They stopped trading those back in 2020, I believe. So it's really just a triple witching now, but they still call it quadruple. Anyway, the thing to note here is that in events like this, they have the potential to create a significant amount of volatility and a heavy increase in trading volume throughout the day. The volume increase comes in the form of traders rushing to close out their existing positions or roll their existing positions before the contracts expire. In turn, this increase in volume can create some sudden sharp moves in the market, e.g. volatility. So be cautious today, stay on your toes, and be on the lookout for rapidly changing market environments. Market conditions, I should say. Aside from the quad witch, we also have the University of Michigan Consumer Sentiment out at 9 o'clock Central Time and the Baker Hughes rig count due out at noon Central Time. That will close out the economic calendar for the week. Let's see what happened overnight. Overnight in Asia, stocks closed mostly higher. We have the Shanghai Index up 0.63%, the Nikkei up 0.66%, and the Hang Seng Index up 1.07%. In Europe, stocks are trading mostly higher this morning also. The FTSE is up 0.24%, the DAX is up 0.58%, and the CAC is up 1.15%. Here in the U.S., the cash index markets are trading mostly higher also, with the Dow Jones up 1.26%, the NASDAQ up 1.15%, and the S&P 500 up 1.22%. Outside of that, we have the VIX just a little bit higher than it was yesterday at 14.39. The U.S. dollar index still hovering around those 3-week lows at 102.19. And the yield on the 10-year Treasury note is holding steady at 3.75% this morning. All right, let's take a look and see who is in the room today. Good morning, everyone. Will's in the room. Another day of Miss the Move. Well, let's catch one today. What do you say, Will? Gnostic, Bill Phillips, Matthew, Charles, George, General in, Jason Lewis, Bear Goes Long, Happy Friday. Stephen, Casey, Alfred, Travis, Sarah Hall, great to see you, Sarah. Caprice, Sanisa, Sean, Robert, Shane, Shai T, Dennis, Dan Trader, James, Trading Research. Good morning, everybody. Thanks for being here. All right, what do you say we dive into a couple of charts? So I mentioned this yesterday. I do sort of an abbreviated version of what Holga walk you through. I'm going to share four markets with you: the E-mini S&P 500 future, the E-mini NASDAQ future, crude oil futures, and gold futures. I keep my charts pretty simple. I'll just run through this real quick again. Here's our daily chart of the September contract for the E-mini S&P 500. Here you see these two black lines. These are our weekly kickoff levels that we put together each week. Down below here, I have some volume bars. You see we just finished a rollover, so we've only got a couple of volume bars for the September contract. Down here, it's slow stochastic oscillator just for gauging momentum. And then a handful of moving averages. The light blue line is a 200-day simple moving average. The red line is a 50-day simple moving average. This darker blue line is a 20-day exponential moving average, and this green line is a 10-day exponential moving average. And the black line going through the candles is our VWAP. So like I said, here is our daily of the September contract. What a move yesterday, huh? And all the September contract traded in a 92 handle range, settled the day at 44.71 quarter, up 52.75 points. We traded slightly over 2 million contracts and added about 57,000 in open interest. Again, I mentioned this quite a bit yesterday. The June contract was off the board today. June contract is expiring at the end of the day. It's part of the quad witch that I just talked about. I said, all right, let's roll back into it. I said yesterday that stocks looked like they could be setting up for maybe a bit of a hangover day. But man, it was just off to the races right after the 8:30 bell. Now we've had 6 consecutive higher closes. Volume is still strong. Momentum continues to point to higher prices. The ES is now up 23% from its October lows and just over 15% for the year now. The next levels I'm watching on the upside, I didn't mark it on this chart. I meant to do that before we started. But I'm watching an upside target of 45.09 now, which goes back to April of 2022. And then my next stop after that is all the way up at 45.88. So let's see if we can keep moving this market. Let's zoom into a 4-hour chart real quick. Here we have this nice healthy uptrend going back to these are lows from May 24th right here. Got higher highs, higher lows the whole way up. Like I mentioned yesterday, just a textbook rally. Prices towing the line along this 20-period moving average right here. I've mentioned this not just here, but in other places. I was in the coach's office hours yesterday, and I said right now in the equities markets, dips are for buyers, and it's been proven to us time and time again so far this year. Let's take a peek at our 30-minute chart. So a quick note on yesterday's price action. We took out Wednesday's high right out of the gate, trended higher for the rest of the session. There were very few downticks early on. I know it's tough for a lot of people to buy new highs when a market's moving like that, but that was kind of the play yesterday up until we hit this little double top here, and then we kind of got a pullback. We hit the highs right here at double top right here at 44.85 half. And then we kind of fell back into value to close out the day. Now, overnight inventory looks to be a little mixed, maybe a little long right now. We're still trading inside yesterday's range. Inside value approaching yesterday's highs right now. Historically, or at least in my experience observing and trading the S&P over the years, I do notice that it has a tendency to go maybe a little sideways to lower after a big update like we had yesterday. But like I mentioned before, it's also expiration Friday, so we're likely going to see maybe a mix of profit taking and portfolio rebalancing. It could make for a choppy session. This red line up here that I put in is another level that I've been kind of keeping an eye on. This one goes back to September of 2021 at 44.68. I really wasn't expecting prices to hit this yesterday, but here we are, and we've been kind of trading around it all night. I'm going to be using this level as sort of my line in the sand today. You know what I mean? Sort of long above, short below type of level. And like I said, I will be expecting some choppiness, maybe a little two-way trade. So overall, my initial bias for this morning is to sort of look for that sideways trader. Stay patient. I'm gonna wait out that first 15 minutes or half hour after the bell. Then after the dust settles, start looking for some low time frame trade opportunities. I'm not looking to fall in love with any positions today. With expiration looming, I'll likely be on the sidelines for the last half hour of the day also, just to avoid kind of getting swept away at the end of the week. You know what I mean? All right, let's take a look at our crude oil chart now. Here is our daily of the August contract in crude oil. Yesterday, the August contract traded in a $3 range, settled at 70.81, up $2.35 on the day. We saw 260,000 contracts trade, which is a nice jump compared to yesterday. Added just over 13,500 in open interest. This roll is really moving along now. Again, there's still a little trading volume in the July contract, but the bulk of the open interest has now rolled into the August contract in crude oil. So yesterday's pop put us right back to this 20-day moving average here, and then right back into the middle of our weekly kickoff range. We remain in this sort of period of consolidation going back to early May and just playing both ends of this weekly kickoff range. Like I said yesterday, these weekly kickoff levels have not changed much in the last couple of weeks, nor should they really until we start seeing some real direction. Again, yesterday we were playing around the lower end of the range, and now we're back towards the middle. Yesterday we talked a bit about OPEC cuts and rising demand in China, and those are still the hot topics right now. But I'm really just seeing a market struggling to find some direction. We have a nice volume spike due to the roll, like I said. Prices have traded back above the 10-day moving average. Momentum is kind of signaling sideways movement for the moment, but this market is visibly range-bound right now. Zoom into our 4-hour chart. So yeah, this market's still just bouncing around, just like I said. We keep testing previous highs, previous lows, getting teased with false breakouts every once in a while, putting the squeeze on anyone with a long-term bias, just hanging weak shorts out to dry. Skilled range traders are likely having a field day with this market right now. Here's our 30-minute chart. So it's been a few minutes since I looked at this. Well, let's talk about yesterday's price action real quick. Overnight, Wednesday into yesterday's open down here, we tested our weekly kickoff low and this value area high from Monday here, then bounced back to open inside of value from Wednesday before making a run for highs up here. We spent most of last night trading inside of value, and now overnight inventory was looking a little short, and now going into the open long with maybe just a small gap, just a tiny gap higher. Looks like we might get it filled in just a few minutes. Again, we open outside of value. Opening inside of value is kind of a key for me to stay patient and wait for some direction. Though I am going into this with an initial bias to the upside. Yesterday's test of that weekly kickoff low, followed by a new high for the week, has me thinking of seeing a bit of follow through today. There was this weak high from Wednesday and a failed test of weekly kickoff low that had me looking for buyers yesterday. You heard me mention that. But overall, like I said, weekly kickoff low in this value area low from Monday held strong yesterday. That remains a good line in the sand. Above that area, I would prefer to continue looking for short-term buying opportunities. Maybe we'll come back to this in just a few minutes to see how the open plays out. For now, let's switch over to the NASDAQ. Okay, here is a daily of the September NASDAQ contract. In all, the NQ traded in a 370-point range yesterday, settled at 15,374 and a quarter, up 174 points for the day. We also saw about 732,000 contracts trade, nearly identical to Wednesday's volume. And the September contract also added 20.6 thousand in open interest. Again, hammering this home again. Today is the last trading day for the June contract. June goes off the board today. So roll out of those and get into the September contract. So we've had this nice rally the last 6 trading sessions. Wednesday, we broke out and closed above our weekly kickoff high right here. And yesterday, we went back to test our weekly kickoff high before heading up to make new highs. We have a healthy increase in volume throughout the roll. We're trading comfortably above these short-term moving averages here, and momentum is still pointing towards continued strength. That's a nice healthy rally. We're trading right around the highs from March 2022 right now. I have a level up here at 15,650 that goes back to January of 2022. I do see that as an objective at the moment. Here is our 4-hour chart. Again, nice healthy uptrend going back to this low from May 24th. Higher highs, higher lows the whole way up, just a textbook rally, sort of towing the line around these 10 and 20 period moving averages, and the occasional test of the 50 period moving average. Just like with the ES, this chart is telling me that dips are still for buyers. Dips are being bought. Early price action yesterday looked like this was ready to take a little breather, but obviously that is not what happened. So let's take a look at our 30-minute here. Looking pretty similar to the ES. Yesterday, we opened inside of value from Wednesday and then just ripped higher, eventually petering out with this little double top here, nearly identical to the ES chart. Overnight inventory getting a little long, was mixed, getting a little long, but we're still in value from yesterday. As I mentioned earlier, and Hogue likes to preach us quite a bit too, when prices open inside value, it's typically a pretty good idea just to stay patient, wait out the first 15 minutes, half hour of the session. Just wait it out until the market has found some direction. Let the dust settle and then start looking for your opportunities. I'm also going to repeat what I said yesterday. With all these dips being bought in the NQ, my initial bias is to be long and wait for buying opportunities. But also keep in mind that what I said about the ES, it's Friday after a healthy rally, and it's also expiration day. Things could get a bit choppy. With some potential profit taking going to the long weekend mixed with a little portfolio rebalancing, things might get just a little hairy. So stay patient, wait it out till the dust settles after the open. Then once the smoke clears, start looking for some low time frame trading opportunities. Moving on to gold. So here is our daily chart for the August contract. August contract traded in a 37-point range yesterday, settled today at 1970.7. We also saw 260,000 contracts trade, and the August contract gained just under 3,000 in open interest. Yesterday, I mentioned that this looks like a market struggling to find direction, pretty similar to crude oil. Pardon me. Gold has been range bound for over a month now, and these weekly kickoff levels have not changed very much over that time. Yesterday, we had a test of our weekly kickoff low here. You might even go so far as to call this a false breakout. I don't know. Depends on how technical you want to get with it. I would say it likely drew in a few weak shorts before turning around and running right through their stops. This light blue line here, like I said, is a 200 period simple moving average, and we can see prices sort of consolidating and ranges condensing a little bit between the 200 period moving average and the 20 period moving average, which is this darker blue line right here. Now we mentioned the US dollar trading right around 3-week lows yesterday and again this morning. I'd say if that trend continues, we might see a little breakout and a test of weekly kickoff highs sometime next week. Like I said, it's likely these weekly kickoff levels will remain the same or at least very little changed going into next week. Here is our 4-hour chart of the August gold contract. Again, this just looks like textbook consolidation to me. Yesterday, we tested the low from May back here, the late May low back here. And then we just saw buyers step in immediately to eat up all those weak shorts from the overnight session. And now here we are right back in the middle of our range. Get a closer look with the 30-minute. Here we go. Overnight inventory was long. Had a little gap open. Looks like just about ready to close that gap since the market open. It almost looks like an inverse setup to yesterday's open where prices gap lower down here. And then we took out the overnight low to open regular trading hours, then just turned around to fill that gap in the first hour of trading right here. I'm not saying we'll see the exact same scenario in reverse, but it does feel like this market likes to sort of set traps for us. I mean, if you look at these 4 points of control here, going back to Monday, seeing how they are just lined up. We've just been blowing out buy stops, blowing out sell stops, then finishing right back where we started again. So that said, if this gap isn't filled in a timely manner this morning, then my temporary bias will shift to the upside, and my target will be to take out this weekly high back here from Tuesday at 1985.9. On the downside, a move in a value from yesterday could lead to another test of weekly kickoff low, but I'm kind of looking for this market to close out the week pretty close to where we are right now, or pretty close to where we started the week, right in the middle of this weekly range. Overall, I'm not here to fight this market. There's been a decent two-way trade here all week long, and we'll likely get more of the same today. That's what it looks like it's shaping up to be. All right, that's all I got for you in the charts. Uh, what else? Oh, Monday is I mentioned a long weekend a little while ago, but I didn't actually say what it was. Stock and bond markets in the US will be closed on Monday in observance of the Juneteenth holiday, and CME products will have an abbreviated trading session. Most markets closing around the new hour Central Time. And as such, we at Top Step will also be taking a long weekend. Uh, so there will not be a market prep or recap on Monday, but you can expect us back Tuesday morning for all of these great segments. Mr. Hoagland will be back with us on Wednesday next week, so you can look forward to that. Other than that, I hope everybody has a great weekend. Let me just check the chat real quick, see if we have any questions coming in. I do not have the TPO profiles up in the S&P, George. I just saw your comment there. Hogue is the master of the TPO charts, and I won't pretend to mimic what he coaches there. It is not my specialty, but I am trying to learn, and Mr. Hoagland is teaching me a lot. I'm not so comfortable with it that I feel comfortable teaching it, but I'm getting there also. It's something that I really just started looking at when I started at Top Step, but I'm learning more and more about it every day also. Oh, we got some internal live data we've been working on. Should be a nice feature. Looking forward to that also. All right, everybody. With that, I'm going to let you go. Have a great trading day. Have a great weekend. And I look forward to seeing you all again next week. Thanks again. Take care.